Okay, let's explore this dividend received deduction tax situation. Riverbend Inc. received $305,000 dividend from stock it held in Hobble Corporation. Now, Riverbend's taxable income is $2,380,000 before deducting the dividends received deduction, right, the DRD, and it's also before a $78,000 net operating loss carryover and a $132,000 charitable contribution. Now, Exhibit 16.6 is in front of you so you can see what the dividend received deduction percentage is that applies. And then you also want to read that little note at the bottom. Okay, so let's explore question 1. What is Riverbend's deductible DRD, assuming it owns 10% of Hobble Corporation? So we're trying to determine the deductible dividend received deduction. Now, if it owns 10%, here's the logic we have to use. First, we identify the dividend received from Hobble. That was $305,000. Then we subtract the 20% DRD deduction. Now, less than 20% is what I mean. The less than 20% DRD deduction comes out to be 50%. Just want to state that as clearly as I can. So if we take A times B, what we're left with is a dividend received deduction of $152,500. Now, that's our preliminary answer, but we've got to take care of a couple tests here, or at least one anyway. We've got to say what was Riverbend's taxable income. Well, it was $2,380,000. Then subtract out the charitable contribution so we can derive a modified taxable income for the taxable limitation. Okay? And then take the taxable income limit, which is the number we just calculated, the modified taxable income for the taxable limitation, in this case $2,248,000, and we take it times the 50% taxable income limit. All right? Then we can reach this conclusion, which says, since the dividend received deduction is less than the taxable income limit, right, $152,500 is less than $1,124,000, then all of the $152,500 it can be deducted. So the dividend received deduction is $152,500. Now, let's tackle one more question related to this scenario. What is Riverbend's marginal tax rate on the dividend? All right. Well, the tax rate for Riverbend is 21%. And the dividend received less the DRD is $152,500. So take, what I listed over here, you see some codes, A minus C. So the $305,000 less the deduction, right? It's the other amount, the other half, $152,500. And then you compute the marginal tax rate by taking the 21% times the $152,500, right? And you're going to divide that by the dividend received. So following the logic, it's A minus I times H divided by A. And if you do all that math, you'll come up with 10.5%. So that's the marginal tax rate on this dividend.